Good morning, everybody. Welcome to another NAJ Better Business webinar. We hope you're all keeping well. We hope that your families and your friends are also keeping well. We hope that these webinars are proving useful. Start checking in if you're on the chat function. Please let us know where you're watching or engaging from, which part of the country, or even what country you're joining us from this morning. I think this particular subject that we've got for you today, precious metals, that some of the questions have come in previous webinars, and David Brough, who joins us today, who is a regular contributor for the association, every month in our Inside Look newsletter, gives and also in the Jeweler as a sort of gold standard feature, gives an up-to-date, informative assessment of where precious metals and materials are, and a useful commentary, which we do get good feedback on that. So it seems sensible to host a discussion now, and David and his colleagues Philip and Jayant were due to speak at the Summit 2020, which is now postponed until next year. So we're delighted to be able to host this conversation digitally. The questions that many individuals and businesses have in the industry right now, I think, are quite appropriate. And the structure of the session will be a discussion to start and then questions at the end. However, that shouldn't refrain you from commenting or posting questions throughout, and the guys will pick those up as we proceed through the session. Just some housekeeping from myself. As we will be publishing future webinars, we are looking to stick as much as possible to the Tuesdays and the Thursdays at 11. We also have the digital coffee and tea breaks taking place that have had a fantastic response. They are on a Monday at 11 and a Wednesday at 11 as well. On Monday, our colleagues at Retail Jeweler are actually doing a takeover of that coffee break, and there's no structure to them, there's no program. It's just a chance to check in with other individuals in the business, in the industry, and just see what's happening, see what people are up to. For more information on that, that is on our What's On page, alongside any other webinars that we've got forthcoming. And we will be publishing 3 or 4 webinars over the next few days. Please stay in touch. Please stay connected to us. It's important for us as an association that we keep communications going at this time. And I'll hand over to David, and yeah, wish you all the best with the webinar.
Thank you very much, Ben. I'll just wait for the screens to emerge of my 2 colleagues who will be joining us today. Jayant Raniger from Pure Jewels and Philip Newman from Metals Focus. Hi, Philip.
Good morning, Dave. How are you?
Good morning, David.
Hi,
Good morning, everyone.
Well, we've got lots of attendees. I can see 100 there now on the screen, so that's fantastic. It looks like a dry subject matter, precious metals and gemstone markets, but we're going to make it as interesting and interactive as we can, and bring it back into the jewelry domain as much as we can. We're going to talk about the gold market, the silver market, platinum and palladium, and also then onto diamonds and other gemstones. So I'm David Brough. I'm the editor of Jewelry Outlook, a digital magazine. I'm now going to introduce my 2 colleagues. They will introduce themselves, and once they've introduced themselves, we'll kick off. So firstly, Jayant, do you want to tell us a little bit about yourself?
Certainly. Thank you, David. So my name is Jayant Raniger, and I'm the 3rd generation in our business, which my grandfather founded in 1950 in Nairobi in Kenya. So before I joined the business in 2003, I trained, I graduated as an economist, did some research for the World Gold Council, then worked in the city in the area of risk management with Deutsche Bank, and also had a short stint with Merrill Lynch in their private banking. But of course, my passion and my love has always been in the jewelry industry. So 2003, I entered the industry, back into the business. Gold and jewelry had pretty much been, part of my growing up, and I've thoroughly been passionate and enjoyed it ever since.
Thank you very much. Philip, please introduce yourself.
Sure. So my name is Philip Newman. I've been in the market since the early 1990s. I'm now one of the founders and directors of Metals Focus. We've been in the market for 7 years. It's an independent precious metals research company. And we now have a team of 28 spread across 8 markets. And we put together independent proprietary numbers, supply, demand, and price forecasts for the major precious metals. And our key clients, which I think is no problem saying, the likes of the World Gold Council, the Silver Institute in the US, and most recently, the World Platinum Investment Council. So that's, I guess, Metals Focus in a nutshell.
Very good. Well, thanks so much, and great to be on board with you. First off, we're going to talk about gold. We're going to talk about the gold price and the likely trends going forward in our views. And then we're going to talk about how this can impact upon the jewelry sector during this crisis and beyond. So gold yesterday hit a more than 7-year peak at $1,746.5 an ounce. And today was a little bit higher than yesterday's close and was trading at just over $1,720 an ounce. So a very sturdy performance if you consider we're in the midst of this economic emergency and crisis caused by coronavirus. Gold is traditionally seen as a safe haven during times of global turmoil, and it seems to be fulfilling that role right now. Now, gold had hit several years ago, over $1,900 an ounce. So we're not far off its historic high. We're just over $200 an ounce, or so short of its historic all-time high. So the first question I'd like to ask the panelists, starting with Philip, is what outlook he foresees for the gold price in the coming months, and what will drive the gold price through this crisis?
Sure. Well, I think ultimately we are positive towards, we think there's still room for the gold price to move higher this year, and also I think into 2021 as well. I think the key factor that we look for is our institutional investors, because really that's where what we call the weight of money is, that can really drive gold. And I think they are concerned, or very concerned, about the economic outlook globally. They're concerned about what equities may do. And I think also they're attracted by the policies of key central banks that are maintaining, very low interest rates. Because after all, one of the key challenges for gold is yield. So if interest rates are high, then investors will look to invest in those assets rather than gold, which doesn't generate any interest.
And do you anticipate, Philip, that the US interest rates will remain at around zero for quite some time to come, given the gravity of the global economic crisis?
Absolutely. But it's not only in the US, we're looking at negative interest rates in Europe. We have, very subdued interest rates in the likes of Japan, elsewhere. So really we're looking at this on a sort of a global environment. And I think from that point of view, we think that gold certainly has, I think, a positive outlook from a price point of view.
Yeah. So could I just ask both of you, Jay and next, do you think, Jay, that gold potentially can hit an all-time high relatively soon or not?
I mean, if we look at what's happened and how the market has been responding to the news that's coming out, I mean, we're expecting, huge downturn. Rishi has already announced that the GDP.
You're talking about the British Chancellor of the Exchequer, right?
Rishi Sunak. And he's already announced that, we've got a potential 25 to 30% drop in GDP this month. So the markets, I feel, and Philip, I'm sure you'll agree with me, has already discounted the fact that all the shocks and all the expectations and this, drawn out lockdown is already priced into the market. So my personal opinion is, for the price to go up any further, we'd actually need a new shock, some new news that the market haven't expected. And I think that's, it's a fact that we're going to have recession, possibly depression. That word is being coined at the moment. We accept that lockdown isn't going to end in the foreseeable future. The date where these things are going to be eased is getting longer and longer. So I feel the markets have already discounted for this, and the expectations are that it's going to be quite a tough ride going ahead.
Philip, what's your view? Do you agree with that broadly? Do you feel it's not likely that gold is going to hit an all-time high anytime soon?
Well, I think probably in the immediate future, if you do have another round of sell-off in the stock markets, and if that sell-off is pretty pronounced, then investors will be selling, frankly, anything and everything to raise capital, and that would include precious metals. So you can have a case that in the next couple of months or a few months that gold could take a hit. But I think, going back to the point, yes, I think it certainly is priced, much of what's going on is priced in. But for example, if you have another round of injections by the Fed, then I think that could be gold positive without doubt. I think hitting a new high will be, I think, very difficult. Even if.
What about the impact of gold-backed funds, exchange-traded funds? I mean, if people generally around the world take the view gold is going higher, are we going to see strong inflows, Philip, into these funds, these ETFs, and could that potentially drive gold to a record high price?
Possibly, but at the moment we already have a record investment in these assets. So I think if gold was to ramp up, so as you said, we're now around 1720. Let's take a scenario, we hit 1800 quite quickly. I think we have a lot of investors that would try to sell into that. When we go back to 2010 and 11, when gold hit 1920, and then fell off really quite quickly, a lot of investors were burnt by that. They remember that, and I think you'd have a lot that would be selling into that rally as well. And I think that would also make it quite difficult to get up to a 1900, I think, price point, to be honest with you.
Okay, thank you. Can I ask Jay, I mean, what does all this mean for the UK jewellery sector? I mean, we've got essentially a very strong gold price. The pound against the US dollar, in which gold is denominated, is soft. I mean, it actually traded at 1 month highs against the dollar yesterday, but that essentially the currency has been quite beaten back in recent years for lots of factors. Essentially, it's a relatively soft currency against a dollar, which can be considered by many as a safe haven in times of crisis. So what does all this add up to for the UK jewellery sector, say, from the point of view of restocking gold? And also in this crisis, there are many jewellers in great financial difficulties, retailers, for example, who may look to sell some gold to raise cash. What are the challenges that they may face?
There's and again, relaying this back to an article that you wrote, David, quite recently, where there was talk of inability to actually sell gold back into the market, and there's no market at the moment to actually trade. Whether we're buying gold bullion or selling scrap gold. But I had a conversation with Baird & Co. They're currently operating at the moment, and asked them about premiums, and their premiums haven't gone up. So I think they're providing a fantastic service. So this idea that as jewelers were sitting on some stock, the price of gold is relatively quite high at the moment. A lot of the doom and gloom has been priced into the market. So from a certain point of view, there is equity in the gold amount. There's in the stock that we're holding. So is one able to sell that through? Yes, at the moment there are a few players in the market who are taking it in and able to refine. Okay, it might not be up to the same level of service or quickness that it was pre-lockdown, but the market is still there to trade physical goods.
Are jewelers, UK jewelers who want to restock gold, are they going to find it quite tough given the high price of gold?
If they're looking at if they're looking at buying gold bullion, that's available. But when it comes to restocking gold, we're not selling anything. Our stores are in lockdown. We're seeing a few inquiries come through online, on our website, but we're just not able to trade because, it means opening the shop, exposing our staff to risk, exposing the public to worth it.
Yeah.
So from that point of view, we're locked down. So there's no flow of purchasing or selling of any stock at the moment, really, in the current lockdown scenario.
All right. Can I ask Philip, if you're able, Philip, could you just talk us through briefly the graphics, firstly on the gold price that you've got, and then the gold-silver ratio graphic, please?
Sure. So this data is courtesy of Bloomberg. So very quickly then, all of these prices are in dollars per ounce, and this is just showing the gold price since January 2019, so the beginning of last year, just to really highlight how quickly the price has moved up. Just responding, of course, to the pandemic this year and how that spread, and obviously the concerns about global growth. If I then move very quickly, so quite a messy chart, but the orange line is the gold price, again since January 2019, and then the green one is the silver price. And I guess the key point to really take away here is on the far right-hand side, where you could see that the sharp decline in gold that occurred when we had the stock markets fall. And that was my point, that when things fall badly, you really, as an investor, you sell anything you have. And so gold took a hit, but silver is a far smaller market. It's not as liquid. And therefore, when you have selling into the silver market, it takes a much bigger hit compared to gold.
Philip, if we can now talk about the gold-silver ratio and how this can affect silver prices going forward and potentially demand for silver jewelry. The ratio of gold to silver is really high right now. It's over 100 to 1. So silver's trading at roughly $15.5 per ounce, and gold is trading at just north of $17.20 an ounce. So gold is really expensive relative to silver, and silver has not shot up in price despite this crisis. In other words, it's not been acting effectively as a safe haven investment in the same way that gold has. So first question to Philip, I mean, why is that? Why has silver, in your view, lagged the gold price? And also, do you foresee a possibility that silver could break higher at some point soon to start sort of catching up?
Sure. Well, I think the key reason for silver, the challenge it has, is that sometimes it behaves as a precious metal, so it can follow gold higher and lower for that matter. But because about half of global demand is in industrial uses, in contacts, etc., sometimes it behaves as a base metal, or as an industrial metal rather. And because of the economic outlook has got so bad, then you've had the likes of copper and lead, those metals being sold off, has sort of dragged silver lower as well. And that is really a key reason why you've had that ratio pick up quite aggressively. But also my earlier point that because the silver market is so much smaller compared to gold, then when you have investors liquidating the silver they hold, it has a much more pronounced impact. But that also means that when gold prices pick up, silver can also rise as well. So to answer your question, given that we are positive about gold, we do think that there'll be some investors that will look at this ratio, they'll see how cheap silver looks, and then they will really come into silver, perhaps in a fairly big way. So we do think that silver has the potential to outperform gold, but how much is obviously the key question. We don't think the ratio will come down that great, maybe into the 90s. And so as you can see, a gold-silver ratio in the 90s is still high historically. Just be clear, this chart goes back to the beginning of 2000, and you can see there the ratio was in the 60s. So, if the ratio now gets down to the 90s, that is still historically exceptionally high.
Thanks very much. So could I then ask Jay what this can mean for the jewellery market going forward? Basically, you've got a cheap silver relative to a very expensive gold right now. There's a possibility that silver may break out higher at some point, but we can't be sure. And silver is clearly often seen now as an industrial metal, more perhaps than as a precious metal. If silver is cheap and gold is expensive, are we going to see more demand post-lockdown for silver jewellery?
So before I go into the jewellery side, I'd like to talk about certainly our investors and whether they're looking at silver as a viable investment option. You know, given the low ratio, we're getting inquiries, but the minute we talk about, oh, by the way, there's 20% VAT on silver bullion, you know, they switch off and suddenly go towards the gold option. So I don't believe that the potential uptake on silver is going to be so different that will cover the cost of VAT. Gold really has been, you know, the precious metal that's been highlighted for personal investment. As far as jewelry is concerned, you know, the one thing that's going to come out, I believe, at the end of this is a bigger focus on design. And we've, even before the lockdown happened, you know, if we look at the trends in the industry at the moment, you know, there's a huge emergence of demi-fine jewelry and self-purchase market. So this is individual customers, predominantly women, who are buying jewelry for themselves. And they are very, very design savvy. And you know, there has to be that emotional connect. So silver is in that demi-fine, you know, between the £50 to £500 price bracket, has always seen that growth in the past year. And I think that that's going to pick up afterwards. You know, there's this talk of you know, post lockdown, you know, people are going to want some mementos to feel, okay, yes, we've come out of this lockdown, you know, relatively safely. You know, it's something to you know, look forward to, as a talisman of hope, perhaps. And silver is going to be that choice metal. You know, all the collections we're currently designing for, you know, various institutions that we're working with, for instance, the National Gallery, it's all silver. It's all in that price bracket between £50 to £500. This is where I feel the creativity is going to be at its highest, certainly within the design focus and craftsmanship segment.
Great, thanks so much, Jay. So potentially good times for silver despite the crisis ahead. Philip, could you kindly move on to the platinum chart?
Sure.
And to show the trend in platinum relative to gold. So essentially, platinum is at a huge discount now to gold. It's less than half the price of gold, in fact, per ounce. So gold's running at around $17, $20 an ounce, and platinum's in the roughly $750 per ounce area. Philip, do you want to sum up why what used to be seen as the top premium metal, platinum, is now in price terms at such a huge discount to gold? What are the key reasons for that?
Sure. Well, I think that there's a couple of factors. Firstly, you know, in terms of the desire for a safe haven precious metal, then, you know, gold is really at the forefront of that. In terms of platinum, what we find is that its own supply demand is not supporting the price. In other words, there's too much supply and there's not enough demand. And that's why we've seen, let me just go back to the previous one. That's why.
And if you could explain, Philip, how the crisis has impacted upon platinum too. I mean, you know, closure of mines, that kind of thing, refining impact, just to highlight what the price impact can be, and also talk a little bit about platinum's use in automobiles, in cars, and what the outlook is for its demand there.
Sure. Well, I mean, you know, so, you know, most of the platinum is mined in South Africa, but because the palladium price and the rhodium price have been so strong, that means that the prices that South African miners receive, because they're not mining just platinum, they're mining a whole range of PGMs, of platinum group metals. And that means that because palladium and rhodium prices have been high, that's allowed the mines to stay open for longer than they may otherwise have done. So we haven't had sort of a supply response in terms of supply falling. And on the demand side, the most important area of demand for platinum is in autocatalysts. In other words, you're using platinum and palladium and rhodium to reduce the harmful pollutants that are being generated by the exhaust system in vehicles.
So is that diesel cars?
No, well, diesel and also all vehicles for that matter. But really, the key heartland, the key area is in diesel. You're absolutely right about that.
Which is out of fashion, right?
So again?
Which is out of fashion.
Well,
diesel.
it has been. I know that
it has been considered as a pollutant. I know they're trying to resolve that in different ways. But is this the key reason why platinum's down, basically? You know, the demand for diesel-powered vehicles is down.
Well, that's right. And also because, you know, in a diesel car, you can use either platinum, well, it's mainly platinum, but because palladium was really taking some market share for platinum, so platinum was getting a double whammy as well. So you didn't have a negative supply response and you wouldn't have enough demand. And so really its own supply demand wasn't helping the price. And therefore it was really reliant on what gold was doing. So there is...
Very brief, what's the outlook for platinum prices? I mean, you know, in this potential huge economic downturn we're about to see, demand for cars will drop around the world. On the other hand, you know, the lockdown is creating supply tightness in mines for platinum. So what's the price outlook in brief general terms for platinum in your view?
Well, I think, you know, it is still positive because it will, to a degree, follow gold higher. I mean, you mentioned earlier about, you know, how big the gap is between the two of them. We wouldn't think the gap will get any bigger. And there are also some investors that would look at that gap and they're positive about gold and they think that platinum is undervalued. And so you will have some investors that will be buying into platinum as well. So I think we are, to some degree, positive about platinum going forward as well.
Okay, thanks so much. So Jay, I'd like to ask you what all of this adds up to in jewellery terms, because you know, traditionally in the past, platinum was always seen as the premium metal for many, many years. It was priced higher than gold. Now it's in price terms, half the price or less than gold. Is this an opportunity for platinum as a jewellery metal? I mean, as a retailer with substantial bridal and engagement sales, do you see this as an opportunity to push platinum hard as a jewellery metal for engagement?
Yeah, I mean, as a company, platinum has always been the desirable metal when we're speaking to customers. You know, as far as we're concerned, if it's white metal, it's platinum, and that was even during the times when it was considerably more costly than gold even. Recently, of course, as we know that the price of platinum is so low, but as far as its prestige value is concerned, as far as the customer's desire for the metal is concerned, and the positioning of platinum in their minds, it's still a prestige metal. It's still, you know, considered the purest, the rarest, and the most eternal of metals, as you know, Platinum Guild International have positioned it. So those values still hold very, very strong for platinum. And you know, when we're sitting with a customer and we're saying, and the customer comes in, oh, I'm looking for a white gold ring, we say, wouldn't you rather have platinum, sir or madam? You know, and perhaps you know, and they'll say, oh, really? Yeah, you know, it won't be that much more costly, but you'll enjoy it a lot more. And when people feel the relative weight of platinum, they put it on, try it on, and they look at the, you know, the extra shininess, because, you know, palladium in jewelry is a fairly, you know, it's a duller color. And when you look at platinum as a piece of jewelry, it's brighter, and then there's an opportunity to educate the customer. But of course, if
so in qualitative terms, in your view, is platinum the best jewellery metal above gold?
Well, I wouldn't think that's a fair comment to say, because the color of gold, you know, has never lost its sheen, and but it's really down to personal taste. You know, the potential to combine platinum with gold. You know, the potential to combine gold and silver, for instance. But the opportunities as far as designing is concerned, with platinum as a metal of choice, is that much more exciting going forward, because there are certain properties, certain strengths that platinum have. If we look at the high design houses of past and current, platinum has always been a certain choice of metal, and I think there's a huge potential to bring more creativity with that metal choice for customers.
Okay, thank you so much. So Philip, if I could ask you to kindly show us some palladium charts, and talk a little bit about the trend in palladium prices. I mean, it's extraordinary, isn't it? The giddy heights which palladium has reached.
Sure. So this chart goes back to early 2018, and the palladium price is the green line. And so you can see just how much more expensive platinum has generally been. It's been this year that we've had such a change. And the reason for that, as you can see, that is mainly it's due to palladium, and that's really reflecting what's happening with the supply of demand of palladium. So supply is still continuing. We haven't seen huge change there. The main issue is on the demand side. The biggest area is in cars, again, for controlling pollution. The biggest markets are the US and China. And so they, until what's happening recently, they've been going great guns, obviously, thinking of last year and very early this year as well. And it's just simply the case that supply isn't keeping pace with demand. And it's really been, that has led to that run up as well.
So Jay, if I could ask you, Jay, I'm just watching the time as we've got to get onto the gemstones, but Jay, palladium is priced now comfortably above $2,000 an ounce. It's more expensive significantly than gold at north of $17, $20 an ounce. Is palladium finished as a jewelry metal for the time being?
Absolutely, and any palladium stock I'm holding at the moment, I'm seriously considering that to be the first batch to effectively melt down. I don't see a future for palladium, because I mean, personally, my personal viewpoint and what we've always presented to our customers, we've always been a platinum positioned company, and so the whole idea of palladium, it's a non-story. Before it was a considerably cheaper metal as the same family group, it was always compared to platinum, an alternative to platinum. That's how it was before.
Palladium was used in men's wedding bands.
Absolutely, for someone who didn't want to spend £2,000 on a platinum wedding ring, they could buy a palladium wedding ring at retail for £500 or £600. That's just not the case anymore. There's no story to tell there from a man's jewelry point of view. It was never really that popular, for women's jewelry in the first place. We wouldn't really find engagement rings made in palladium. So yeah, I think as a potential for jewelry making, I think palladium is pretty much gone.
So one last question, Jay, about palladium before we move on to gemstones and diamonds. Palladium is used in white gold. Is that making white gold more expensive, and is that creating opportunities for platinum as a jewelry metal relative to white gold?
Absolutely. It's now a choice of either silver jewelry or platinum jewelry if people are looking for white metal, and white gold. The palladium component now makes white gold considerably more, 18 karat white gold considerably more costly than perhaps 18 karat yellow gold. And then we have to educate people that, okay, there's a certain component of white gold has palladium, that's why it's more costly. And it's easier to sell platinum in that context, to customers. So I think even white gold will suffer. A lot of so not only are we focusing on engagement, wedding rings and bridal jewelry with platinum, but we're also now foraying and looking at diamond jewelry, general diamond jewelry in platinum, and that's definitely a viable option going forward.
So white gold basically hit by the double whammy of the gold price being very high and the palladium price being very high. So if I may have a quick chat with Jay for the next 8 or 9 minutes about diamonds and color gemstones, then we'll open the questions to the floor 3/4 way through this webinar. Jay, diamonds. There's a big debate in the industry now about the Rappaport price list. Rappaport in March cut the polished diamond prices. There was uproar among sections of the global diamond trade about this. It almost seems like they were in denial about a cut in polished diamond prices. Rappaport have said that polished diamond prices broadly fell by around 7% in March. I mean, surely Rappaport are right, aren't they, Jay? I mean, diamond prices, polished diamond prices are falling. We're in the midst of a severe and rapid economic downturn around the world. A lot of people not thinking about buying diamond jewelry right now.
I mean, that's definitely one thing, David, and you and I definitely agree on. You know, we're facing a scenario where diamond prices have been falling for some time, and you know, and I admire Martin Rappaport for having the courage to actually drop the prices on his rap sheet. Okay, timing can be, you know, suspect. That's where predominantly a lot of the criticism has come from. But if we're looking at a market for gemstones, where we want, you know, a price benchmark. We want to be able to price our gems, you know, by looking at certain benchmarks, certain guide prices, and be consistent within the marketplace. Then for diamonds, the rap pricing sheet is really the only system that we have to go by. Now,
Rappaport, Martin Rappaport himself has said that he's not afraid of competition. It's a free market at the end of the day. Do you foresee realistically that some kind of alternative, serious diamond pricing mechanism can arise in this?
I mean, look, David, it doesn't take rocket science to put a price sheet together. You know, survey the market and put a price sheet together. But who's got the courage? Who's got the courage to drop prices? You see, what happens is if we want, on the one hand, if we want a pricing mechanism that's realistic and reflective of supply and demand within the market, then that means, like the gold markets, like the precious metal markets, like all commodity markets, if we are to look at diamond as a commodity, then we should expect the prices for that commodity to go up as well as down. And what happens is that every time Rappaport drops its price, it gets a lot of criticism in the marketplace. And it takes a lot of courage to drop those prices. So anyone who's coming into the market with a competitive pricing sheet would have to have that level of courage to drop prices and not succumb to market pressures or, you know, industry pressures, I would say.
Jay, what are your views on the outlook for laboratory-grown diamond prices in the short term and in the longer term? So in the short term, natural diamond prices seem to be falling in the context of the wider global economic malaise. But in the longer term, we're looking at the closure of the Argyle diamond mine in Australia into 2021, the lack of new diamond deposits coming through, a sense that supply of natural diamonds in the medium term can tighten. And what can that mean in terms of prices of lab-grown diamonds into the longer term? So basically, what is your short-term and long-term view of the outlook for lab-grown diamond prices?
Well, I want to finish one more thing about natural diamonds. The reason the prices dropped recently is because the demand isn't there. You know, the minute demand picks up, the price will go up because it's of limited supply. You know, it's a commodity of limited supply. And
do you think there'll be a quick bounce back when we come out of lockdown in terms of natural diamonds?
Maybe not in the short term. Maybe in the short term it may drop further. You know, maybe 7% drop probably wasn't far enough. I believe that there's downward pressure on price of natural diamond, you know, before then, and it will probably continue after lockdown. But the long-term prospect with natural diamonds, I believe, is going to be driven by supply and demand. Of course, when you're looking at laboratory-grown demands, supply is a non-issue. Therefore, the prices of laboratory-grown diamonds are falling much faster. So we can't really compare the pricing mechanism of lab-grown diamonds vis-a-vis natural diamonds. Natural diamonds, the prices would go up and down. With laboratory-grown diamonds, there's only one direction. As the innovation improves, as the technology improves, the price is going in one direction. That's always going to be down.
Yeah. Turning to color gemstones, rubies, emeralds, sapphires, and so forth. Jay, what is your feeling about the outlook for prices of these stones?
One of the downsides of the colored gemstone industry is we don't have the benefit of reference pricing sheets like we do with the diamond industry. At least we've got something to go by. You know, whether we use the RapNet sheet, whether we go onto RapNet and look at live trading prices, whether we go to BlueNile.com and check their price, whether we go to 77diamonds.com and check their prices. You know, there's always a reference point, a standardized reference point to check your prices when it comes to diamonds. That luxury doesn't exist in the colored gems world. However, and I'm sure you will probably be able to talk more on this, David, you know, if we're looking at the rarer gems at the higher end, you know, those prices have just been going up. If we look at the Fellows auction that happened, you know, before lockdown, you know, they had record sales on certain types of gems. What's going to happen post-lockdown in the short term? You know, we're all sitting on inventory, we're all sitting on gems. I think there's going to be a lot of bargains out there, you know, and there's going to be a certain, you know, offloading of stock and inventory.
All right, so one last question for you, Jay, before we open up for questions. And if I could ask David Roman, after Jay responds, to invite the Q&A to open up. The very, very top end of the diamond and colored gemstone market, the kind of gems that are sold at the high value, so-called magnificent jewelry auctions. What is your sense about the outlook for values and price trends in exquisite and magnificent colored gemstones, Jay?
I don't think the prices on the very high end are going to be affected by this. You know, the people either, you know, it's all about timing. So at the very high end, at the magnificent end, if the market isn't there at the moment, the sellers just won't sell. They just won't consign to the auction houses, and they might wait for, you know, next year because they can afford to. But generally, I don't.
Will the market be there? I mean, will ultra high net worth individuals fall on hard times in some cases and need to liquidate?
Yeah, but then the market, so that might not be their first point of call, because at that end, if the market isn't there and we're heading into a Great Depression, then quite frankly there won't be a market to be made on you know, the very high end. Those type of things tend to work quite well when there's general good liquidity in the industry and the economy. But I think something like that might get delayed. But I don't think it will affect the values. You know, there might be a fast sale here or there, but it won't affect the overall market, if that makes sense.
Okay, very good, thanks. So it's 11:45. Let's open up for questions. So David Roman, if you could kindly open up for Q&A. I don't see any questions yet. Let me let's open up the discussion among the panelists in the meantime before the questions arrive about the gold price. Let me be devil's advocate a moment with Philip. Philip, talked about a view that perhaps gold may not be looking to hit its all-time high in price anytime soon. But what if the following kind of scenario happened? Let's imagine that the share markets really sold off again, big time, because of a view that this coronavirus pandemic is just really proving very, very difficult to work through. If there were essentially a massive downside shock in the global equity markets, coupled with dollar weakness as central banks again move to bring in new stimulus measures, the dollar falls, I mean, could this not add up to being a recipe for another surge potentially in the gold price very quickly into all-time high price levels? Philip?
Sure, but I think going back to my earlier point, if you have a really steep correction in equities, then everything will fall at the same time, and we've seen that before, and I think that will certainly happen again. That, I guess, is the initial knee-jerk reaction in the markets, but we would then see investors come back into gold. If you then combine it, as you said, with further dollar weakness, that is quite possible. But I still go back to my earlier comments that I think you would have selling into that. I think there'll be two groups of investors. Those that would, if you're ramping up to 1800, 1850, pick a price. There'll be those investors that would book profits quite aggressively. And I think that would dampen the rally and maybe end the rally. But equally, there'll be those that would see, well, look how fast this is moving, and they'll be buying into that. But we shouldn't ignore what I call the physical markets. In other words, people that will be selling their jewelry into that. So for scrap, that I think will be very, very significant on a global basis. And equally, the key physical jewelry markets, the likes of India and China and the Middle East, I think at these prices, they would just step aside. So you would have, on the one hand, sort of the dynamics in the financial markets. On the other hand, the dynamics in the physical markets, which would be working against gold. So could it spike at 1900? It could, but I think it wouldn't stay there, and it wouldn't stay there for very long. And I think you see prices quickly falling back from those levels.
And Philip, if the global economic downturn turns out to be just extraordinarily severe, do you think actually that could weigh on silver prices further, given that much of the applications of silver are industrial?
I think it certainly could, because you're using it in a whole range of consumer electronics. It's used extensively in cars, for example. The uses are really quite diverse. That's one of the strengths of silver. But I take your point. I think if you do have that, then I think that would certainly weigh on silver. But if gold, go back to your earlier point, if gold is hitting $1,800, $1,900, then I think silver would be along for the ride. And that will certainly ramp up really quite aggressively as well. It's been very volatile, and I think that would certainly return.
And Jay, what are your thoughts on silver in this respect? Do you have any personal view on the outlook for silver prices?
Based on the ratio, there is a potential for upward demand as far as silver is concerned. I mean, silver has always had more volatility simply because the market, as Philip said, is a much smaller market. But when it comes to personal investments, I don't see people coming in and buying silver because they want to invest in it, simply because of the VAT element to it. But predominantly, when you look at the cost of design and manufacturing of silver jewelry vis-a-vis the commodity price, it's not going to suddenly have that impact on silver jewelry that perhaps you would see in the gold market, in gold jewelry. So I don't think there's going to be a massive impact as the price of silver, versus the sale of silver jewelry. I don't think we'll have that much of an impact as far as jewelry is concerned.
Could I ask both my colleagues, do you see questions on the screen? Because I do not.
Yes, there's loads of questions. If you go on to the chat,
I can't see them. I can't see them. Jay, can you take? I cannot see the questions. Jay, could you take over at this point, if you don't mind, and read out the questions, because I can't see them, and then we can answer them.
So I can see Mr. Pravin Patni has asked a question. What is the panel's outlook for retail jewelry sales in the next 12 months after we reopen?
Yeah, well, my view is it's going to be very difficult times for the jewelry sector. One of the problems that the UK jewelry sector is facing now is liquidity. I mean, they are starved of cash flow, While they are, for example, in many cases, retailers applying for financial emergency grants, they're still waiting for the money. Banks are proving very slow in extending loans, possibly because they're not going to make much money out of these loans. But the fact is, banks have been very slow at extending emergency financial support to the UK jewellery sector. So I think it's going to be a really tough time, and also with the latest projections that UK economic output could fall as much as 13% this year. You know, we are looking at the overwhelming likelihood of recession, and people are going to find it very difficult to buy jewellery. I think the engagement and bridal segment will be obviously relatively resilient. People will continue to get married, but for discretionary purchases, I think it's going to be pretty tough times for this year.
No, I agree with that, and I think the biggest surge post lockdown is going to be very much driven by liquidity issues. So, you know, I'm expecting customers to come to me. You know, we're already getting phone calls from customers saying, "Are you open? Can we, you know, if after lockdown, if we wanted to come and sell our gold, would you be able to purchase it?" And I can see that happening as a surge, you know, post lockdown.
Thanks, Jay. Could you, Jay, if you could kindly take over as chair, because you can read the questions and I cannot, and just read the next question.
So Vanessa Burkett, I presume of Catherine Jones in Cambridge, have just asked, we've seen huge increase in price of larger gems and diamonds over the last few years, with sellers making the move for the crazy prices. Could the potential drop in prices mean that there's a bargain for buyers and sellers? And again, I think that pertains back to the liquidity issue, where you know there will be potential bargains to be had in the short term.
Yeah.
Another question that's coming up: how do you see pawnbrokers setting their loan offers to customers against the current gold pricing? Bearing in mind we may see a substantial increase in customers looking for this, and knowing that gold may drop back down and potentially cause a shortfall in sale price versus any outstanding loans. I'm probably not qualified to talk about the pawnbroking end, but I definitely see that surge on gold sales and people actually scrapping their gold, retailers as well as customers coming in.
Yeah, no, it's a very good opportunity now for customers to go forward to retailers to scrap their gold, and you know, if they require cash, this will be the opportunity. The problem, of course, in the immediate term is the lockdown, the logistical difficulties, because shops are shut. But yes, I think emerging out of the lockdown, it's an opportunity for UK retail jewelers to take in customers' gold for scrap.
Andy was asking a question. Sorry. Andy's asking a question. Do you think retailers should reduce the price of their current diamond stock to account for the recent diamond price fall? Can I answer that very quickly, David? So the idea behind the diamond price fall is to sell and replace. But in this current circumstances, what we're going to find is a lot of people may sell their diamonds, but they may not replace it because, again, for liquidity purposes. So, you know, reflect. So, and again, I think that's where a lot of the anger, you know, regarding the drop in price from Rappaport has stemmed from. That it's all very well. You're saying that we should be selling and replacing at the current sell price so that we're maintaining a trading profit. But in you know, we've gone into lockdown. We're going to emerge out of lockdown. Liquidity is going to be the issue. We're going to be selling stock. We may not replace it because the demand's not there anymore. So I think that's where a lot of the anger is sort of stemmed through. But ultimately, you know, that price has dropped. You know, the cat is out of the bag there. So it's really a case of you know, what are people willing to pay?
And do you expect the diamond price to keep falling into the near term?
Yeah, I think
natural diamond.
I think the price of natural diamond in the short term will drop further.
What other questions do you see, Jay, in front of you?
Let's have a look. So I'm just trying to pick another question.
There's one here from Rebecca.
Yeah, go on.
Please, could we have some links to the best places to monitor prices of different things? What sites are you guys reading? What are the go-to places for information? I think if you're interested in prices, I guess platinum, palladium, silver, we use a public domain one. It's metalpages.com. So that's metalsdaily.com, which we think is quite useful in terms of the prices. So that's I think, quite a useful one. The charts I put up were from Bloomberg. I guess most people won't have access to that, but I'm quite happy to send that small chart pack through if anyone wants it. I guess if they send the request through to David and he can pass it on to me, I'm very happy to do so.
Yeah, so that would be Rebecca, if you kindly send your email to Dave, not to me, but to David Roman of NHJ. So David Roman ROMAN at NHJ.co.uk.
Damon's asked an interesting question. With consumer confidence low post-lockdown, do you think that the market for synthetic diamonds or lab-grown diamonds will see rapid growth? David, what do you think of this?
I think this is an opportunity for lab-grown diamond jewelry sales, actually. I was very struck by my visit to the JCK Las Vegas Trade Fair in June of last year, when I saw so many suppliers in the United States of lab-grown diamonds, and it occurred to me that if it's happening in the United States, the biggest diamond jewelry market in the world, it will follow everywhere else, just a matter of time, and it will come to the UK. The fact that natural diamond prices are softening or indeed weakening in this period would suggest to me that lab-grown diamond prices would also weaken, and they're obviously cheaper than natural prices. So the cost of the cost from the retailer's point of view would be less. Ultimately, it will boil down to marketing, how the lab-grown diamond jewelry segment is marketed relative to the natural diamond jewelry segment, and really we're in the process of gearing up on these sides. Marketing is key across the board with these metals. I mean, as we said earlier, platinum has a great moment of opportunity now because of the big discount to the gold price. So it's really up to bodies like Platinum Guild International to move forward rapidly to take the opportunity and to market platinum vigorously. Jay, do you see, say, one last question? Our time is coming up. One last question, do you see, Jay, on the screen?
Liz is asked a really, really good question. With a particular upsurge in gold sales, with natural diamond prices falling, do you see potential growth for the second-hand jewelry sales sector?
Could you repeat that? I couldn't hear. There's a lot of echo. Could you repeat that
with
question?
The predicted upsurge in scrap gold sales, plus with natural diamond prices falling, do you see potential growth for the second-hand jewelry sales sector?
Oh, yeah. Well, my view, absolutely I do. I think this is a fabulous moment of opportunity, if you like, for any kind of recycled jewellery, whether it be, say, recycled gold or vintage and estate antique jewellery. The reason why estate and antique jewellery can flourish in this period is that one reason is that there's no carbon imprint, no obvious carbon imprint from selling jewellery that has already been in circulation for years. So you could call it eco-friendly, if you like. And I noticed that Rappaport now have started auctions in vintage jewellery. So yes, it's a fabulous opportunity, I think, for particularly online sales of vintage pieces. I know very well a very successful dealer in vintage jewellery and gems called Mian Thane, who's based in London, whom I interviewed for Jewelry Outlook recently, and she's doing really well in terms of online sales of vintage pieces, obviously taking advantage of the fact that so many brick and mortar retail jewelers are shuttered in this period. I mean, clearly the outlook for online sales across the board in jewelry is really very good during the lockdown period and beyond. So yeah, my answer is absolutely. This could be a very good moment for sales of vintage and estate jewelry pieces.
And David, one last question, if we can, and most probably, I'm sure you're going to wrap up on that. But Roger's asking, what is the name of the artist for the watercolor painting behind you?
So I couldn't hear that one. Try me again, Jay, please.
Roger's asking, what's the name of the artist of the watercolor painting behind you on the wall?
Oh, I actually don't know. I don't know. It's a pastoral scene of England, a rural England, we can say.
You could have opened your window and see a pastoral scene of rural England in Hampshire, I think, David.
Well, that's true. I'm surrounded by fields. It's a very nice scene here. Great. Well, thanks so much to you, Jay and Philip, for joining me here today. Our hour is now up. We covered all the ground, all the precious metals, the diamonds, lab-grown diamonds, and color gemstones to give you a kind of a personal viewpoint on the outlook. Obviously, we are not giving any kind of investment advice in this presentation today. We're just giving personal views, looking at the big scenario out there. So thank you all very much, everybody, for attending today. We really appreciate. There were over 100 people from across the sector who joined us. Thanks so much. Stay safe. Thank you.
Thank you.
Thanks all.